Going over the trades on the day for Monday, March the 27th. We were at equity peaks last Thursday and have had a rapid drawdown the last 2 days as the market continues to chop. And I want to talk about 0 days to expiration options and the effect of that potentially on what we're seeing in 2023. But first, the results on the day: minus 9,500 on the 250K portfolio and minus 1950 on the 50K portfolio. A lot of twisty, turny price action, some of the more frustrating price action I've seen today. Just one of those days where as soon as you take a net position, it goes against you. It almost feels like it's finding your net position and then moving in the opposite direction. Some days everything goes our way, and other days, like today, it's frustrating. And we'll go over the trades in a minute. We are at the end of the month and looking to recover. 4 trading days left. Historically, over the past year, the end of the month has been more profitable for us. After today, we are up on the month 8,400, up on the year 24K. And so let's look at the market and the trades on the day and go over 0 days to expiration options. We continue to see more what feels like random, just twisty, turny price action, and difficult to trade, just back and forth, no real trends, lots of head fakes, and 0 days to expiration options are one of the things that they call them 0 DTE, have been talked about and discussed how the volumes on these have gone up. That means that you just, the day of expiration, like today, March the 27th, maybe you buy a call or maybe you buy a put, and it expires at the end of the day, so the premium is out of the money. So if the market makes a quick move, you could make a huge gain. So the option writers tend to be more institutional, option buyers tend to be more retail, and so we know that the seller, the institutional traders have the ability to take all their net positions and kind of move the markets in a way, trade in such a way that that would benefit them, and so you get more compressed ranges in that scenario. Lower VIX, more compressed ranges when option writers tend to have the advantage and trend in their favor, and so you get this twisty, turny price action. And 0 days to expiration options could be a big factor in why we're seeing a lot of this price action in the market. The market eventually has to move to a price that represents the true market. So it can't just continue to stay in a range if the true price should be at a different value. So what we saw also on Fed Day last Wednesday was the market massive chop, and then the market just really bounced off this level, gapped up, came back the very next day and bounced off this twice, bounced off it twice on Friday, and then tried to come down here and bounced off this level a little bit higher today, just this really small stair step of support. And so we know that the printing presses are back on, which favors the bulls. The fundamentals are negative, but the printing presses balance sheet is back on, and so be interesting to see how the market resolves itself in this congestion since last Wednesday. Really, 4 days of congestion. The market has traded. The Nasdaq has traded in between the high and the low of Fed Day for 3 days now. So 1, 2, 3 days, and so just a tighter and tighter range really since the Fed. And so we'll see how that resolves itself. You can draw these convergent lines if you want, lower lows and higher lows and lower highs, convergent congestion. We'll have to see a breakout one way or the other as we go into the end of the month, and it should be interesting. So let's look at the trades on the day. S&P 2 for 6. Covered 3, almost hit its profit target, rolled over. Momentum reversal, no follow through on the downside. Tick wave, no follow through on the upside. Open chop, came close to reversing up here and didn't follow through. Came down here, got out at its exit time. Down on the day, adaptive moving average, 3 losers in a row. Tick count trend dynamic turnaround, lost on the day. and just tick chop. Got short, nice entry. Got long, nice entry, and the market didn't move high enough to reverse. So that went down on the day as well. So just a very tough trading day in the S&P, 2 for 6. NASDAQ was 1 for, let's see, we traded 5, 6, 7, 2, 3, 4, 5, 6, 7, 8, 9. 1 for 9 on the day, 1 for 8 on the day. AT 2020 and AT 2022 have historically done really well, but there is no opening trend to be captured in 2023 so far. Opening chop has been beneficial on some days. Today it was not. Viper was down on the day, 2 winners, 2 losers. Tick count trend was down on the day, 2 winners, 2 losers. Tick pullback down on the day. Cobra 3 down on the day. Momentum reversal had the trade of the day, but it was really the only profitable strategy on the day. The other 2 winners were in the S&P, and they were very small. And so nice short on momentum reversal. And then you had Robot lose on the day as well. This prop-up pattern that we always talk about is extremely long in the tooth. And to get the pin out, you can see at noon, the market just gets propped up again. It's a hard pattern to exploit. And also it could be a function of the 0 days to expiration, option writing. And so you tend to see a lot of congestion here at the end of the day on days when the market is down, and so it's hard to come up with a strategy to take advantage of taking either long or short positions. Potentially exiting at noon if you're profitable, or not taking trades after noon if the market is down on the day. Could be something potentially to think about, but this pattern is not normal, it's not natural, and it's been around for too long, in my opinion. So we'll see if this pattern starts to break down and we get follow through or more reversals. Either way would be good. And so those are the trades on the day for Monday, March the 27th, 2023. Looking forward to the trades at the end of the month as we go into the end of the month. 4 trading days left, and would like to come back and make some more equity peaks. So it's a good drawdown alert, good time to get in on this portfolio as well. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.